Debt forgiveness, is that ordinary, is that an ordinary income?
Typically, yeah. Yep. So you want to make sure clients understand that. You want to structure things in a way that minimizes tax consequences. You want to make sure the clients understand the timing issues. So you might have 5 debt settlements, and the first 3 are tax-free because the client has more liabilities and assets. But by the time you get to 4 and 5, those other debts are gone. So maybe there's a different tax consequence to settling those last 2. You have to go through that, and for each client, each settlement is separate. Any other questions? Car repossession is a big one. We're just starting to talk about how to help people keep their cars if they want to. Some of the smaller credit unions are doing loan modifications for cars. Same thing, you've got your clients, they're all making 6 figures a couple of years ago. They had the $800 car payment, which they didn't even think about. Now, that's about what they're paying in rent. It's very painful. They can't afford the car, they go to the credit union, throw the keys on the counter, say, it's your problem. That's a taxable event generally, because almost always the car is worth much less than what's owed. But that's negotiable. You can help your clients keep the car or reduce tax consequences. Like I said, some of the smaller credit unions we're talking to are doing modifications on car loans. Normally, it's better to get rid of the car if you can, if it's not going to be a tax issue. But you want to try to negotiate something to avoid a deficiency judgment on that. And if the client really wants to keep the car, call the bank and see if they're doing loan modifications. If so, might be able to help keep the car. John?
You think every company that loans money for the cars can deal with those deals that you just said?
Not every company.
Not everyone?
They're just starting. I don't see commercial loan modification up there, but I think 2010, 2011 is also going to be a year for commercial loan modification. Again, it's a case-by-case basis, but I think we're going to see that happen a lot.
I've even heard of SBA loan modifications starting up.
SBA has some guidelines?
Yeah. I guess that's it.
I think so. I mean, I think it just makes sense.
Thank
See
you.
guys.
Thanks. All right. Sorry to blow out of here so quick.
That's okay.
I have another appointment. Thanks, guys.
See you guys.
All right. Talk to you soon.
Andy.
Like Grady's.
Hey, guys. Yeah, good to meet you.
Yeah, the statistic that I'm letting everybody know about is of the commercial loans there's set to come due in the next 5 years. Any idea what percentage are underwater?
For commercial.
Anybody?
50 plus.
About 50%. That means 50% of every commercial loan out there that's set to come due is ripe for modification. They have to get modified. They have to. Banks are going to have to do it. There's no, I mean, unless they just want to, if Fannie Mae wants to get into the convenience store, gas station business, I guess they can. They don't want to do that. They're going to modify this one. So that's, I keep an eye out for the mom and pop grocery store, gas station, convenience store, flower shop, any small business where they own the building. If they've taken any money out or bought it within the last 5 years, they're going to have to modify that